Hi, I'm Joan Cartan Hansen. Thank you for joining for this Dialogue Web Extra. We're talking about economic trends in 2010. And gentlemen, we've got some phone callers on the line. Let's go to Ria in Titonia. Ria.
Yes.
Go ahead.
My question is, in Oregon, the taxpayers just voted to tax the higher income brackets.
Mm-hmm.
How do our economists think Oregon will do compared to Idaho in the next 4 years because of that?
That economist word is sometimes hard to say. I just want to get that pitch in there for myself. Thanks for the question, Ria. How's Idaho going to do compared to Oregon? With Oregon,
it sounds like they're picking up on the idea that I was putting out there of doing a temporary surcharge on income. I think it'll help them hold together some of their government services and hopefully make it out the other side a little more smoothly. I don't think it will be a real dampening effect on their economy by any means.
Well, I tend to agree that, I mean, you can't look strictly at one side of the ledger, and they were faced with nearly $1 billion in cuts. So that would have been a pretty hard hit on public services.
How much is Idaho looking at?
At cutting? Mm-hmm. Well, I guess you could say that the upcoming round is another 1.6%, which is relatively small. I think it's about 45 million, but we've already cut 6%, I think. So we're looking at about 7.5.
Yeah.
We're looking at some pretty sizable cuts.
Yeah.
But, you know, again, it does, you know, taxes aren't just dumped in a black hole. They're used for public services. And when you look at things like education, that can be a factor in how attractive you are for economic development, because people generally don't want to move their kids somewhere where the education system is inferior.
Okay.
Well, on the other side of it, it provides a disincentive on the part of a disincentive to the rich,
right,
to engage in economic activity. And who was it that's the president of Nike?
Phil Knight. Phil
Knight, yeah. And he was adamantly opposed to it. He says this is going to destroy the Oregon economy. Obviously, that's an extreme position, but any tax provides these disincentives, and then the other thing, somehow there's if you're going to raise money, you tax the rich. For those of us who aren't rich, we say, yeah.
But, almost like Robin Banks, you go where the money is.
It's always easy to tax somebody else.
But Mike raised the point, it's not this year, but a number of years ago, that you cannot really raise tax revenues without getting down into the middle class. It can't all come out of the rich.
Okay, I'm sorry, Steve, I'm going to go with our next question because we're going to make sure I catch everybody. Norma in Ontario. Norma.
Yes, I'm curious about how everybody seems to have forgotten that we asked not to have internet purchases charge taxes. And therefore, we're never going to get caught up because people keep buying more and more on the internet.
Internet sales tax is a real issue.
Mike, is Idaho part of the conglomerate of states?
We're not a formal member of the Streamlined Sales Tax Project. We're kind of an advisory. We haven't actually formally signed on.
What is the Streamlined?
Streamlined Sales Tax is an effort among states to try to satisfy some concerns at the national level of taxing the internet, basically remote sales. And it has to do with defining the tax base and making administration of the sales tax from a company perspective across state jurisdictions simpler. That's, I think, one of the big stumbling blocks to getting the Congress to open the door to states taxing sales that are outside of their jurisdiction.
Sales taxes are so fragmented.
It's hard to
assess, but if we can agree on a uniform one for internet sales, it would work.
Okay, let's get this last caller. Chris in Hammett. There you go, Chris.
Yes, I was wondering what the gentleman would think of imposing a tariff on Chinese goods that are at least as equivalent to the manipulation of our currency or their currency regarding the dollar. That way, I mean, we could at least kind of take a little bit of the edge off of the trade deficit.
Steve, can I throw that one to you first?
Trade creates an interdependence among nations. If we were to do that, China would likely retaliate, there's a fair amount of tensions as there is, and that could lead to a trade war. So I have reservations about doing such a thing.
You go back into the 30s, and we tried to protect American jobs with what they call the Smoot-Hawley tariff. No relation. And it's like Steve said, it just triggered a trade war, and this consensus seems to be now that it just contributed to the recession, to the depression, made it worse than it otherwise would have been. So on the one hand, you say, yeah, let's protect those U.S. jobs, but we can't do it in a vacuum. As soon as we take action, they're going to take action, and where does it end up?
Well,
Okay.
but to be a contrarian,
Okay.
I want to jump in this too.
what China is doing is akin to Smoot-Hawley. I mean, their manipulation of their currency has the same kind of end effect as having tariffs.
Tariff.
I mean,
Yes.
they're basically, through currency manipulation, putting themselves at an advantage. And it's not through market forces. So, it is a serious issue, and I certainly wouldn't suppose to advise the U.S. government, but I think there can be a case made that you can't just idly sit by and let those things happen without response.
Well, do you suppose that because the investment community has such power in this country that the tariffs aren't on the table because of that? Because they're going to make their money whether it's made in China or America, whereas a tariff is isolationist in effect.
Well, I think the balance of power between China and the U.S. has shifted as China has taken on so much of our debt. They're holding many billions of our dollars.
Right, and they hold that over our heads, but if they pull the trigger, they maybe are shooting themselves.
Chris,
well,
thank you.
A tariff by nature, it benefits a country, like you said, currency manipulation benefits a country that manufactures things, and that's what we need in this country, is at least a level playing field where manufacturing can take a hold again.
Well, the parallels to the 30s are interesting because in today's world, the country that's most closely playing the role of the United States in the 30s is China. And they're trying to protect their advantage as an exporter through currency manipulation. And I mean, it's tough stuff.
And I apologize, Chris. I'm going to have to cut you off, and because I have one more question because we're almost out of time. There are some headwinds coming at us in this economy. The possibility of that recovery, that slow growth. What are some of those things that we have to worry about besides, lots and lots of snow in the East Coast that kind of slowed everything down?
Well, I could start out with a couple. In the last week or so, we've seen markets become very skittish over the fiscal instability of some European countries such as Greece and Portugal, and you want to throw Iceland and Spain in there perhaps as well. But here in the U.S., there's a couple of real estate challenges ahead of us. One is in the commercial real estate sector, and we've been seeing some articles in the press about some of those commercial investments may be upside down, just as our residential mortgages might be. And then a second one, and perhaps less important, is that this spring there'll be quite a number of mortgages with variable rates coming due for an adjustment, and that may trigger a second, though smaller, round of mortgage foreclosures.
Steve, any other headwinds you want to blow this way from Moscow?
I'm concerned about both the sharp rise in the national debt, which is now around $12.2 trillion. I think the debt to GDP ratio is now pushing 85%. More importantly, there's an intergenerational debt load of around, the numbers I've seen as high as $60 trillion. And this is the obligations that the current generation are generating that they're not funding in the future, such as Medicare. And this sits on top of about a $14 trillion economy, and I think that our debt to GDP ratio is getting high enough that that's going to start having consequences on a lot of important programs in Washington.
I would mention two other things. I agree with the items that Dick mentioned, but we also have the precipice that state governments in particular are looking at, and that's going to be contractionary.
Fiscal year 12 is scary.
Right. Well, even 11. I mean, look at what's happening here, and I forgot the other one.
That's okay, because one thing I want to mention. Go ahead, and then I'll throw my last question in.
Well, I go back to a point that Dick made earlier, and that is the Fed responded very quickly, and I think wisely, to make credit available to provide the liquidity the system needed. Can they reverse it as quickly as they put it into the market? And it remains to be seen. They think they can, but we don't know.
Well, did you remember the?
Yep.
Okay.
The other one is basically we've had stimulus, and that stimulus has helped. But as we move through 2010, we're going to see the other side, which is the wind down, and that becomes contractionary. So there are some things that are going to be negative influences on the economy.
No wonder we're so depressed. You guys can't tell us which way it's going to go.
Oh, you're smiling.
But we're still talking about 3% growth now.
I'm smiling because one thing I pulled off, a business analyst in Chicago says he knew the recession is over because the sale of men's underwear is going up. And he says that's his indicator. That as long as people are buying, more people are starting to buy men's underwear, then that's the idea that the economy is going to get better. So, now, of course, I haven't bought any men's underwear recently, but more power to you if you're going to go out there and do that. Gentlemen, thank you very much for joining us. I appreciate you taking time, and thank you for joining us for this Dialogue Web Extra.
Thank you.